Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 22nd of May. I'm Daniel Lam, your host for the podcast. One of the major developments in 2024, which is new to many of us, is the gain of importance in Japanese investments. It is no longer a fringe topic amongst our investors, and we're handling more and more requests every day on these markets. Now, front and center to all these currently is the debate between the currency and the performance of the Japan stock market. So let us dig deeper into this topic today. Now, Japanese government bond yields have gradually trended higher in recent weeks, with the 10-year yield approaching 1%, amid ongoing concerns that the BOJ could slow the pace of bond purchases. Now, this is likely significant for the dollar yen, because much of the recent rise in dollar yen was arguably driven by widening US-Japan yield differentials as US yields rose. Now, in recent days, higher Japanese yields and softening US yields start to reverse this effect. So the dollar yen, we believe, is likely to remain within a 150 to 160 range for now. We believe the bias remains to the upside in the coming weeks and to the downside over the coming 3 months. Key support is at 149.30. Now, concerns that this could weigh on Japan equities are understandable, but this can be partly offset by currency gains for international investors and supportive fundamentals, which are ultimately likely to dominate. Now, for financial year 2023, the results thus far track growth in both sales and profits. Most sectors in the Topix Index reported wider margins, driven by FX tailwinds and strong US demand. Share buybacks up 45% year-on-year. That was also significant. So, we remain overweight Japan equities and expect that to outperform global equities on a 6 to 12-month horizon. In particular, we would emphasize upon the financials, which benefit from a steepening yield curve, as well as other domestic stocks, which are doing well on the back of Japan finally coming out of the lost 30 years. Now, these areas would also be less susceptible to any potential yen strengthening compared to the exporters. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.